Is the US housing market starting to rebalance? If you've been in the market for the past 2 years, you know that it's been a crazy seller's market. There's a lot of people competing for not a lot of homes. Homes are selling for over list price, usually within the first weekend, and things are really in the seller's advantage. But now, for the first time in about 8 months or so, we're seeing new listings start to increase. Now, I'm not going to say the market has completely changed because of this, but is this the start of maybe a more balanced market, a market where home buyers and home sellers are more in sync, when there's about as many home buyers out there as there are home sellers, right? The past few years, there's been way more buyers than there are home sellers. But now we're seeing new listings increase, we're seeing pending sales decrease, and that's resulting in more inventory on the market, which we desperately need. We're still well below pre-pandemic levels, and we'll take a look at all this data and what it means for you as a home buyer or home seller in this video. Before we do, my name is Liam O'Reilly. I'm a realtor with Jerry Riley Real Estate. If you have any real estate needs, all of my contact information is in the description. Happy to help you whether you're here in Vermont or somewhere else. And let's get right into the video here. We're going to go over to the first article, which is out of Redfin. It's their weekly market update, which I cover a lot on this channel because it's a great way to stay up to date with what's going on in the housing market. And we see here right from their title, and I know I cut off their title a little bit, but supply ticked up in February for the first time in 8 months. And we can see that from their chart here. Let's see. Pending sales, new listings, active inventory. Here it goes. Active listings of homes for sale up 2% year over year. 1.7%, I guess, according to these numbers, but roughly 2% year over year, which is not that much. It's not up by much, but it's still significant because this is the first time it's happened. And we can see that new listings or active inventory is trending flat or even slightly upwards. It's definitely, this time last year, the orange line is 2023. This time last year, new or active inventory was trending down as new listings and the listings that were on the market were getting were going under contract by buyers who wanted to purchase them. Now we're seeing more new listings. New listings are up 13% year over year. Pending sales are down 6% year over year. And all of that is causing active inventory to increase, which hopefully, if things continue along this line, it could result in more of a balanced market for home buyers and home sellers, where homes sell for list price or below instead of list price or above, like we have seen, and sellers can negotiate. Now, this doesn't necessarily mean that we're going to see a drop in median sales price. Of course, if this continues, if we see active inventory really start to spike up, we see pending sales start to decrease, maybe some more cracks in the economy like layoffs, things along those lines, then we could start to see the median sales price decrease. I think in the short term here in 2022, what's most likely to happen is we're going to see median sales price stay flat. Now, if active inventory continues to tick up, the market could become more balanced. And that's what we saw pre-pandemic, right? Home prices were flat. Inventory was at a relatively healthy level. It was lower than it was before the 2008 crash, but it was much higher than it is now. And home prices, they weren't shooting up, they weren't dropping. It was more of a stable market. And I think we could return to that as early as this spring and summer if we see active listings start to or continue to increase and inventory start to build. And if we take a look at the historical inventory numbers here, we can see that we're still at a historic low of inventory. In January of 2024, again, this data is a little bit old, but active listings are only up 2% year over year, so it's still relatively accurate for the situation that we're in. There were about 1 million homes for sale in January of 2024, according to this chart, and back in January of 2019, there were I keep hopping in between 1.6 million homes for sale. So we're still about 600,000 homes short across the country from where we were pre-pandemic in January of 2019. Of course, this is even below the 2004, 2005 listings in the market that we saw then. But still, back in 2019, that was more of a balanced market than we have today. And I think we at least have to go through that balanced market, that balanced time period before before we see home prices crash. Again, I don't think we're going to see home prices crash, certainly not this year, but it could return to a more balanced market. And now back in 2007, 2008, we can see this huge spike in active inventory on the market. Of course, this is when home prices were falling across the country. Housing was not in a good place, and that was really the big housing crash of the last 15 years. And if we take a look at what happened with foreclosures during that time, a lot of you know that foreclosures spiked during the 2008 great financial crisis, and that's a big reason why home prices came down. And we can see here there were about 2 million or about 3 million foreclosures in 2009 and 2010 when we were in the meat of the great financial crisis. And if we take a look at those numbers compared to 2023, we see that we're still well below, we're about 10% of the foreclosures that we saw in the great financial crisis. And the reason why these foreclosures aren't going to cause home prices to drop this year is because it takes a while to foreclose on properties now. It takes much longer than it did back in 2007 and 2008. When we take a look at this chart, the average days to complete a foreclosure, so from when the foreclosure starts to when they actually foreclose on the property, back in 2007 and 2008, it took under 200 days, about 6 months roughly, to foreclose on a property. They would start the foreclosure process. 6 months later, the bank would own it. Now it takes about 720 days in Q4 of 2023 to foreclose on a property. So that's almost 2 years. So if we see foreclosures start to tick up now, or at least the starts of foreclosures now, which we're not seeing, foreclosures are still at historic lows. People who have missed the first 30 days of their mortgage payments are still very low on a historical basis. But even if we start to see that tick up and we start to see foreclosures increase, it's still going to be 2 years before that inventory hits the market. Again, it's not something that we're seeing now, and it's not something, a spike in foreclosures is not going to drastically impact housing supply or housing prices here in 2024. It's too long of a process, and there's too few foreclosures out there. Now, something that I think we could see that could have a big impact on this changing market if we see active inventory start to increase is we could see a listing spiral where if you watch my past videos, you know that a lot of sellers aren't selling because they've locked into a low mortgage rate, right? The average mortgage rate for everybody with a home loan right now is at around 4%, maybe 4.5%. And that includes all the mortgages that were written at about 8%. This year, and 7%, 6, 7, 8% over the last year and a half or so, right? So many mortgages were written in the 3%, 3.5%, 2.5% range over the past, or back in 2020, 2021, and 2022, that the average mortgage rate remains around 4%, despite mortgage rates sitting at roughly 7% today. So that's keeping a lot of people in their homes. But what's also keeping people in their homes is if you sell your home, you got to have a place to go. And when inventory is historically low, sellers or potential sellers, people who will sell their home and buy another home, are looking at the inventory on the market and they're saying, there's nowhere for me to go, so I guess I'm just going to stay put. But if we see active inventory start to pick up, some of those sellers, again, not all of them, because a lot of them have locked into a historically low mortgage rate, but some sellers will choose to move because all of a sudden there's a place for them to go. And this could really start to, this could cause listings and inventory to start to pick up drastically, which I think would be an overall good thing. Again, a lot of these people aren't distressed home sellers. There's not a ton of distressed sellers out there right now. Of course, that can change, and that's a story for another video. But with the stats that we're seeing in this video, or with the stats that we're seeing today that I'm talking about in this video, I think it indicates that if we continue along this trend, we could see a more balanced market. We could see more supply. We could see more of a symbiosis between supply and demand, between buyers and sellers, which I don't think, again, it could be like 2019, where we didn't see home prices fall. We weren't seeing them shoot up drastically. And, it took a little while to sell your home, which is really healthy in the overall housing market. Now, that's that's the point I wanted to make in this video. I hope you guys enjoyed it. Let me know what you think in the comments section below. Again, this isn't guaranteed to happen, but I think if inventory starts to pick up over the next few months, especially as we move into the meaty months of spring, April, May, June, July, we really could see this market start to balance out more towards home buyers, which would be an overall great thing for the housing market. Leave me a comment. Let me know what you think. And thank you guys so much for watching, and I'll see you in the next video.